Hi, welcome to D Street Analysis and Insights, a monthly video series on Indian equity markets. I'm Archit Singhal, Portfolio Manager, Equity Advisory PMS, Centrum Broking Limited. In today's video, I'll talk about market update for the month of November, key takeaways from 2Q FY24 results, and key events to watch for going forward. Starting with the market update, in the month of November 2023, Nifty saw an uptick which was mainly driven by good earnings for 2Q FY24 and favorable global cues such as easing of US bond yields and Brent oil dropping to $80 per barrel. In terms of valuations, Nifty is currently trading at 19 times forward EPS, which is similar to the valuations pre-COVID, and it is at a 20% discount to the peak valuations seen in October 2021. Moving to the next section, that is 2Q FY24 results. Nifty profits were up more than 25% in 2Q FY24, driven mainly by financials and auto. Coming to comments on each and every sector. Starting with financials, most of the banks continue to report a healthy loan growth and NPA recovery. There has been some correction in NIMs from the peak, but valuations are reasonable for the financial space. Auto. Most of the auto companies are in an upcycle where the earnings growth has been very good, driven by margin expansion. Consumer sector, most of the companies reported a muted top-line growth due to the weak consumer sentiment. However, margin expansion was seen across the board. Moving to the healthcare sector, companies in the sector reported a decent result for 2Q FY24, driven by easing of pricing pressure in US generics, while the domestic growth remains healthy. Now, coming to the sectors which reported a muted 2Q FY24, IT sector reported muted growth because of postponement of deals and weak global sentiment. The chemical sector reported a weak 2Q FY24 due to the ongoing issues of high cost inventory and weak global demand. Although the chemical companies are talking about a better 2H of FY24. Finally, moving to the market outlook and the key events to watch for going forward. In terms of growth, Nifty profit growth has been healthy for the last few quarters, and valuations for Nifty are reasonable in context of the growth. Investors may remain selective in terms of stock picking and may look at combination of good growth at a reasonable valuation. Going forward, volatility may remain in the markets as we move into the election year. Investors with a long-term investment horizon may use the market corrections as buying opportunities going forward. Finally, in terms of the key things to watch out for, investors may track the global factors such as Brent oil, US bond yields, FI flows in India, outcome of state election results, earnings outlook, and pickup in consumer demand in the ongoing festive season. That's it from my side for today. Thank you for your time, and I'll see you next month.
Investments in securities markets are subject to market risk. Read all related documents carefully before investing.